Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we help you understand all the latest trends of the stock markets in terms of the sectoral moves, the stocks that are on the move as well, and the benchmark indices as to how they are moving in trade today. After yesterday's spectacular rally, we are seeing that the markets are down in trade, also caused by the hurt in the global markets as well. There were mixed cues that we had opened with as far as the global cues are concerned. But right now, as we speak, both the benchmarks, the Nifty and the Sensex, are slipping towards the lowest point of the day, almost a percent of a downtick is what you can see. So what really got gain yesterday, most of it already has been wiped out. Talk about the Nifty right now. If you see 17,936, that's the level at which the Nifty is moving at. 165 points down in trade. 550 points of a decline on the Sensex. 60,203. That's the level at which the Sensex is also moving at. Talk about the other indices. Let's look at how the broader markets, for example, the mid and the small cap indices, are moving at this hour. Well, you are seeing some cuts right there too. 0.5% cut for the mid-cap 100 index, 0.3% of a downfall for the small-cap index as well. But look at the India VIX. That's where the caution is emerging from. 5.3% uptick for the India VIX today, 15.4, and that's likely to be causing this kind of a volatile move in trade today. Also, in terms of the sectors, barring the auto space and the pharma pack, rest all of the sectors are actually down in the red, caused by the sharp declines coming in for the PSU banks today. 2.6% of a fall right here. Also, the IT stocks are seeing some profit taking, 1.15% of a decline right after that sharp 2.5-3% up move yesterday. We are also seeing the overall banking space seeing a decline or a fall of 1.16%. You have financial services, private banks also falling in tow. Realty space is down in the red. Metals are also losing their shine, about 0.6% odd as well. The FMCG pack also dragging a little bit lower in trade today. So let's look at the market breadth. 37 declines to 12 advances as far as the Nifty 50 stocks are concerned. The biggest drags at this point include stocks like Adani Enterprises that are down by 3.8%. Bharti Airtel is down by 3%. Eicher Motors, State Bank of India, Hero MotoCorp, a large part of auto stocks definitely down in the red, and some of those, banking names as well. But what's moving in trade despite the overall muted trend that you're seeing? Well, Tata Motors is shining bright after that wholesales data that has come about, JLR sales as well, and the brokerage calls that are giving some thumbs up to Tata Motors stock going forward. 6.5-7% uptick for that one. Apollo Hospitals, PowerGrid, Hindalco, Divis Laboratories, the other gainers at this point in time. But time now to welcome our guest for the day. Kranthi Bathini joins in. He's the Director of Equity Research at WealthMills Securities. Mr. Bathini, welcome to the show and thank you so much for taking the time out for this discussion. First up, if you could help all our viewers really understand what has really caused the decline after that sharp up move yesterday. We were hoping that perhaps this could be the starting of a pre-budget rally, but just right the next day, we have seen another sharp fall of 650 rupees or 650 points odd as far as the Sensex is concerned. How do you really gauge the kind of move on the downside that we are seeing?
Actually, one thing it's clearly evident on the market is whenever Nifty is going above 18,200 range, market is facing some kind of knee-jerk reaction and it is not able to sustain above that higher level. And some kind of skittishness, market looks tied above 18,000 level. That's what the scenario we are witnessing in the market. But what I can sense is market is spending some kind of consolidation move right now ahead of the earnings season we are entering right now. Right now, earnings season and the budget will give the clear direction to the market. Coupled with, we need to observe the global cues that's currently giving some kind of direction and creating some pressure on the market right now. Market is ahead of the Federal Reserve Chairman that he's going to address in Sweden. So market also wait and watch what kind of initial commentary that's going to come from Federal Reserve Chairman also. These are the key concerns market is waiting right now to get a clear direction. Overall, markets are spending in a consolidation phase right now. Nothing to worry immediately. There should not be any panic right now at this level also. One need to one need to sit and wait for how the things are that are going to emerge in next few weeks. Earnings season is the clear-cut direction movement for the markets right now.
Absolutely. You also talked about how earnings could be, providing triggers for the markets as we move, but this is largely due to the global, weakness that we are seeing and some nervousness ahead of Jerome Powell's speech as well. But, we saw the earnings kick start yesterday with the leader of the pack, IT space, TCS reporting its numbers. Now, albeit on most of the parameters, it was a decent show or a modest number that we saw on account of revenues, profits slightly below the estimates, but EBIT margins also improving. The total contract value coming in at fairly $7.8 billion as well. There was a dividend announcement of about 75 rupees, including both special and interim dividends. But yet we are seeing that the stock has actually slumped in trade. In fact, has been sulking post the results as well. Your thoughts on the earnings that we saw on TCS and going forward from here? How should one really approach the IT space? All of those other major four companies will also be reporting their numbers this week.
One thing investors or traders, they need to think what they are going to position themselves with respect to TCS is concerned or IT space is concerned. If the position is a long-term position, definitely investors can hold on and try to accumulate if there is any further dips that comes. But given the shorter-term momentum is concerned, of course, if we drill down the TCS results, there are more positives than the negatives, but the negatives are dominating right now because of the uncertainty that is playing right now in the overall global space is concerned. So for a traders, they need to strictly go with a stop loss with respect to TCS is concerned, or else a long-term investor, definitely it's a very good opportunity. The stock valuations are turning very attractive for a long-term perspective and long-term investors are concerned. So I advocate the investors, if any further dip that market gives in TCS, definitely they can accumulate in their portfolio for a time horizon of 1 to 2 years.
Okay, for 1 to 2 years, this is the time to accumulate the stock. The stock is down about 2% after the earnings. But let's also keep an eye out on how the brokerage houses have mentioned their picks as far as their take on TCS post the earnings. So Citi on TCS has maintained a sell rating. They've given a target of 29.90 rupees per share. And also, they believe that the Q3 earnings were in line with estimates amid the growth in the regional markets right there. We've also seen Motilal Oswal on TCS reiterating a buy rating on the other hand with a target price of 38.10. So that's like a bullish take on TCS. On the other hand, we also have Bernstein on TCS, which is given an outperform rating on TCS with a target of 38.40. So those from sell to buy to outperform, we have all these kinds of ratings coming in. But long-term perspective, just like how Mr. Bathini pointed out, in case you are looking for a core portfolio stock, for a long-term perspective, this stock could definitely give you good returns in the longer hours, a longer time horizon as well. Apart from this, which other preferred stocks from the IT basket would you be looking at from the other companies that will be lining up to post their results now?
We need to look forward how the next 2, 3 the big companies they are going to come up with the results. Is there any difference with respect to their initial commentary? We need to, by and large, all the large cap IT companies can be in the same space, plus or minus 2-3% 2-3% division in the profit earning growth is concerned, Sakshi. But one thing we need to see how the management commentary. This is extremely important. If you see TCS commentary is concerned, they are cautiously optimistic with in terms of their revenue guidance is concerned in the next coming quarters, and it is premature because we are just completed Q3 earnings, but Q4 earnings are extremely important for IT companies are concerned because majority of the IT budgets and allocations and new orders will be coming in Q4 of the quarter for all these IT companies. So next quarterly results are extremely important, and further we need to see how the things are going to unfold with respect to the global events are concerned. So we'll get a greater clarity right now. So all the IT companies, investors, they are holding in their portfolio. They can hold on. There is no need to do any kind of panic selling right now at this minute because just Sakshi, just 12 months back, all these IT space, all these stocks are darlings for the investors. Okay,
Yes.
just some kind of commentary that's the uncertainty in the global arena. We cannot rule out these stocks, or we cannot sell these stocks from our from the portfolio. We can hold on because the long-term history always evident for IT companies. They are the outperformers.
Absolutely. Well, we are seeing some further fall on the markets right now. Let's keep an eye out on that. 700 points now gone on the Sensex. 60,040. That's the level at which the Sensex is moving at. Remember that Nifty has also breached the 17,900 mark on the downside now, down about 210 odd points at the lowest point of the day. What is really causing this kind of fall? Let's look at some of the other sectors that are moving down in trade. Where is the selling pressure really emerging from? Well, it's the banks that are now down by 1.5%. PSU banks, that's the index you should watch out for. 3.03% of a cut. And most of the stocks from this basket, in fact, all 12 of the stocks from the Nifty PSU banks are now down in the red. Sharp fall coming in on SBI, 2.5% down. Central Bank, Bank of Baroda, both of them down about 3.5% each. We also have some sharp cuts coming in on UCO Bank, Maharashtra Bank, IOB, 4 to 5% down in trade as well. All of them seeing sharp cuts for this one as well. Mr. Bathini, how are you looking at this incremental selling that we are looking at in the markets right now, and how much more downside can this be? And if it is getting triggered from the PSU banks basket, are we looking at a longer period of profit booking now after the substantial rally that we've seen in the last few months of 2022?
Yeah, of course, last 3 to 6 months time, PSU banks have been outperformers, and banks like UCO Bank and other public small cap public sector banks have been outperformers. So what we can see is when the Nifty drifted down below 18,000, we can see some kind of profit booking that's emerging in banking stocks, and predominantly we can see Sakshi, the stocks which have run up recently in past 6 months, that's where the selling is emerging right now. So some kind of outright profit booking is happening. But long-term investors, definitely they can hold on to their positions. Nothing to press panic button at this minute. Okay, because the macro environment in India is very strong. The GST collections are, all the numbers have been quite sanguine with respect to the economic prospects and growth prospects are concerned. So one can see 17,850 level of Nifty, because last time also when a couple of weeks back,
Okay.
Nifty bounced back from these levels. So one need to look forward for these levels right now. And Sakshi, this range in the market, this current panic selling in the market definitely offers a good trading position also. One can
Okay.
take some trading positions also with a medium to short-term perspective also.
Okay, understood that. Well, the markets are looking at sharp sell-off right now. 727 points gone. 60,025. That's the level at which the Sensex is moving at. 17,888. That's the level you have for the Nifty. 211 points gone there. We'll keep an eye constantly on how the markets are moving and where is the selling pressure emerging from. However, just like how Mr. Bathini pointed out, this could be a good point of entry as well to look into some good fundamental names for your portfolio. So let's talk about one stock that is in fact gaining and perhaps looking good despite this overall massive sell-off that we are witnessing right now. And that stock again is from the Tata Group's basket. We've spoken about TCS, that's been dragging, but Tata Motors now, that stock has gained about 6.5%, hovering near hovering near the day's high level as well. And you are seeing the stock at 414, up by 24 rupees, 25 rupees odd. How are you looking at Tata Motors as a stock, and what's really leading to this kind of a rally? And does it have more steam left? Is it time now to look at Tata Motors from a fresh perspective?
Tata Motors have been underperformer in auto pack in last 6 months actually, but opening of the China and also the JLR numbers that came helped the Tata Motors to sustain. Definitely, Tata Motors is in a bright spot. Valuations looks attractive at this point of time. Next couple of quarters results are extremely important for Tata Motors. The stock at these valuations also looks very attractive. One can create their positions at this any further dip that offers Tata Motors, or the current range also. It's a good range for the investors. They can cherry pick Tata Motors at this point of time. given the kind of business momentum, domestic numbers that are going to come in the coming days, Tata Motors is a good stock to pick up uh, in the OEM's space is concerned, Sakshi.
Absolutely. Also, going forward from here, any of your substantial picks that you may want to share, stocks that you think that investors can keep on their radar now with the coming of earnings and budget, some stocks that you believe can actually outperform and may give good returns to investors?
Sakshi, one can have an eye on with respect to budget is concerned, the capex and the infrastructure. These are the key areas government is going to focus. So one can keep on their radar stocks like Reliance Industries, which is a large cap, and also stocks like L&T also one can keep on their watch list.
Okay, looking at that as well. But there's also something very important for all the viewers to note. We've also seen the AMFI data trickling in today's trading session. We have seen the Association of Mutual Funds industry has actually come out with the numbers, and this is for December that they've come out the numbers for. In fact, what we have seen, however, in the current numbers is that the AUM has slipped. From 40 lakh crore rupees to about 39 lakh crore rupees. So that's something that all the investors must keep an eye out on. Apart from this, we've also seen that the net equity inflow is at 7,280 crore rupees, and this is versus 2,224 crore rupees. And this is the MOM, that's month on month comparison. So the net equity inflow has improved. We've also seen hybrid fund inflow improving because there was an outflow last month of about 6,400 crores, but 2255 crores of an inflow has come in this time around. The liquid fund outflow has been seen, however, at 13,852 crore rupees, and there was the inflow last month as well. So there's been a substantial drag. Liquid fund, we've seen a lot of redemptions right there. ETF inflow, however, has been at 8,788 crore rupees, and that's quite encouraging on a month-on-month basis. 1967 crore rupees was the inflow in the last month's thing as well. Now, total debt scheme outflow has also increased quite substantially to 21,947 crore rupees too. The corporate bond fund outflow has also come in slightly at 713 crore rupees versus an inflow. So these two are also another points of concern. We'll keep an eye out on more details released trickling in as far as the AMFI and the mutual fund investments is concerned. But overall, we are seeing similar declines on the stock markets too, and some outflows coming in on the critical portions of the mutual funds as well. We'll keep an eye out on that. Many thanks, Mr. Bathini, for being with us on this show and sharing with us all your thoughts on several sectors and the stocks that you've recommended for all the investors as well. And with that, we wrap up this show. 700 points still down for the Sensex, 60,045, 17,888. That's the level you're watching out for the Nifty as well. Keep an eye out on the markets, and we'll keep helping you understand what is the right way for you to really approach the markets when they are in downturn, and where exactly can you still continue to make money. Many thanks for joining in on this edition. First thoughts on the earnings that have come about, are they as per your expectations?
Sakshi, I think numbers are in line with estimates. Although, I think one good part is the margins have improved from 24 to 24.5%. The dollar revenue growth has also been pretty good, 3.3%. But I think what is important is that the net profitability of the company